The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.
Welcome to the Weekend Podcast. I'm joined by Steve, reliable Steve. You all right, Steve?
Yeah, just me again. Do you reckon this is getting boring now? Just me and you? I don't know. It's
not for me, Steve. I like to chat to you, but I do the chatting.
Yeah, you talk at me.
But no, do you know what though? You can always rely on someone called Steve. You know, it's a reliable name, Steve. It's a backbone of England and Britain and UK and Wales and Ireland, Scotland. Steve's everywhere. Run the country pretty much. They are the hidden backbone, the economic driver of this country. Always reliable. You know, you can always rely on a Steve.
You can't rely on a Peter or Paddy.
Exactly. Never trust a Peter or Paddy.
No.
Very dodgy. Be careful of Petes and Paddies. They never turn up when you want them to. They're both in France. You know, Paddy took another picture. He's floating around Cannes now. Did you see that mansion he was at? That was amazing.
That was like from a film, wasn't it?
Yeah, it was one of these, almost like one of these Russian oligarchs. In fact, that's where he is. Paddy's, they've broken into a Russian oligarch's house, I think, in Cannes. And but it was like one of these really, impressive old, but old style sort of mansions. The swimming pool, and he's on Instagram. Check him out there. And Pete's also in France. Hasn't Pete outstayed his legal welcome there? How long are you allowed to stay in France these days for without being? I may even phone the embassy and say, excuse me.
And he's also working out there as well. Surely that's got to be illegal.
That's illegal. And I call up the embassy and say, you have an illegal immigrant just loafing around in the Alps somewhere, pretending to work and riding bikes, and he should be doing a very important podcast. It's disgusting.
Send him to Rwanda.
That'd be good. Reporting the British embassy comes back and they take him to Rwanda. No, he's illegal. Yes. Don't believe the accent. He's very good at accents, that guy. Be good. And the condition is you can come back to the UK as long as you do the Weekend Podcast again because you've skipped it. Yeah. You're not being reliable. And that's a ridiculous policy, isn't it, Rwanda? And they're still going along with it. They're still pretending it's going to work. It's not going to work. The price is just ridiculous.
What is going on in this world? You've got that going on. You've got the abortion thing going on in America, which is absolutely bonkers. The whole contradiction of the guns, because the people who are voting to keep guns are the same people voting to make abortion illegal. It's just, what is going on? Everything's just going to pot, isn't it?
Yeah. But even I don't want to talk too much politics. In fact, it's not too bad if Paddy's not here because he blames everything on the Tories, which, to be fair, a lot of it is probably the Tories' fault. But Boris, he will not go, will he? He will not go at all. It's literally the only way Boris. People understand this. Boris, we all know he lies. He's a very good liar. I think his intention is good. Maybe that's me just looking to the good side of him. But whatever he does wrong, he will not go. The only way he'll go, right, is at the ballot. Or before that, if the Conservatives think they're not going to win the next general election, they'll kick him out because survival is key to the Conservatives. So if he's going to be a general election loser, they'll kick him out. But he won't go. They literally have to be dragging him out of the number 10. His hands will be white knuckles on the door frame of number 10 and dragging him out. Boris, you've got to leave. It'd be like Trump. Trump would leave the White House and all of a sudden he'd just go on his jet and left. It'd be like that. Same thing. So he's a bit like, it's almost like, I said this before, if you want to judge leaders, look at their hairstyles, right? The more mad their hairstyle is, the more mad they are, delusional they are, because they can't see that. Everyone around them, yes men, like Kim Jong-un, for example, his hairstyle is mad, isn't it? Absolutely insane. It's like the kind of thing, you'd have done as an accident as a schoolboy, just shave your head. And what's he doing? But Kim Jong-un thinks that's cool. And of course, everyone around, it doesn't matter what he wears, Kim Jong-un, people can say he looks fabulous, They say, even though he's a bit of a fat boy, they probably all say, you look very strong, sir. Very good. The hairstyle's very good. He could literally put a dead chicken on his head, and they'd say, that suits you, sir. Very nice, very nice. So look at the leader's hairstyle. If it's out of whack and a bit crazy, and they don't notice it, to me that shows they've got a high level of delusion. That's the measure,
Cool. Well,
in fact, go through the history of leaders, right, and crazy leaders, and just look at their hairstyles. That's what you need to do. In fact, I might write a book on that, Steve.
Escalated.
Yeah. Putin's hairstyle's a bit. Well, I don't know. He has no hair.
Well, it's quite. Yeah, it's just running out, isn't it?
Yeah. Putin looks like a boring man, doesn't he? But essentially, he is in charge of the biggest mafia, sort of almost organised crime gang in the world. A huge militia. You can't get more powerful than his gang, you know? Anyway, but let's move on. Steve, what I'm going to do this week, okay? I'm going to spend my time on one subject. What I'm going to do is I've done a new investment. The video's up there. It's called eEnergy. Have you got any shares in eEnergy?
Nope.
Right, what I'm going to do, it's like Dragon's Den, Steve, okay? You can tell me whether you're in or out. So I'm going to pitch to you, okay? And at the end, you say, I'm in or I'm out, all right? Because I think, genuinely, it's going to be one of the best performing investments I've ever made, first and foremost.
You say that about a lot of stocks, to be fair.
I know, but listen. In fact, I just posted this. This is very important. On Friday, a company on AIM went bust into administration, right? It was a biotech company. Now, very important. And I said, when you take hits in the markets from a particular investment, write it down. It's very important, write it down. And work out why it went wrong. Actually nail down why it went wrong, okay? And then incorporate that into your investment strategy. That way, your mistake will become a powerful lesson and make you a better investor. Do you understand? So every time you're iterating, you're getting better, you're evolving, you're improving. That's humans. Humans are the best evolutionary species on the planet, pretty much. You know, maybe apart from crocodiles, but they still do the same thing they did years ago. We do lots more things. You know, I was just talking yesterday about AI, and I'm thinking, everyone's talking about AI. It's amazing. Whoa, some computers learning, you know, stuff and sorting out things fast. So yeah, well, AI. Do you know who taught computers to do that? We did. And not only that, we've been doing what AI does for hundreds of thousands of years. So, you know, we are amazing creatures. We can evolve, adapt into anything. Doesn't matter what comes our way. Don't, you know, never bet against the human evolutionary skills. And that's what learning about investing is. And essentially this company, DDDD, it's called 4D Pharma, they were a loss-making company, right? They were burning a lot of cash. I think they've been, look at the cash flow statement. Always look at the cash flow statement. Very important. Not just the profit and loss account, cash flow. That's actual cash coming into and out of a business. And they burned like 25 million. And they had debt as well. Now, when you're not earning money, you're not cash flow positive, you're not generating cash, that is a big risk. How are you going to service that debt, you know, if it's based on success of some drugs you have or whatever? It's very high risk. So remember that with any investment. Don't just, you can do two things, can't you? You can give up or you can get better. And that's it. Learn and get better. And I say to my kids all the time, you know, quitters never win, winners never quit. Keep doing it. So and when I say this is my best investment ever, that's because I'm getting better and investing every time. Because I spend a lot of time doing it. It's like anything, Steve. You know, if you do track and field or something like that, if you go out now and do a 400-metre sprint, you know, your first one isn't the best, is it? You know, if you keep doing it on a daily basis, you guarantee in a year's time you'll be a lot better at 400 metres than you will today. You know, that's investing. That's why I love it. Learning is amazing. Humans can learn, Steve. But now, you know, I say bigging up computers that do AI. We've been doing that for years. Humans are amazing. Amazing. That includes you, Steve.
Yes.
I like the enthusiasm coming back at me from there. But this is why, so what I'm doing, the pictures to you, right, and I'm going to tell you exactly why I think it's my best investment I've ever made. First of all, I just want to say I did tweet out something yesterday. It's got a lot of traction, actually, and this is what it was. I said, has inflation peaked? In the last month, natural gas down 32%, copper down 25%, wheat down 25%, silver down 22%, iron ore down 17%, Brent crude oil down 11%, corn down 8%, bond yields down. That's very important as well. Bond yields coming down because people were selling off bonds because they believe interest rates are going up. So the bonds they're holding at the moment are going to pay them a decent return. So they sell them and then rebuy them when it's all settled down a bit. So that's very important. The bond yields go down. Bonds sort of lead the market pretty much. So all that says to me, we're close to peak inflation. All right. Now, why that's pertinent, Steve, in today's society? Why is the market sold off, Stevie?
Well, inflation, yeah.
Exactly, inflation. All right. And I talked about this with this investment. It's called eEnergy, ticker EAAS. And I said, it's very important, and this company pretty much fits all my filters investment. And I said, it's very important when you're investing in companies, and this is built into my, when I've taken hits, I built those hits, and mistakes become lessons. I built them into my investment strategy. So that way I know next time I'm not going to have the same mistake. There's always saying, if you keep doing what you've always done, you'll always get the same result, and expecting a different outcome by doing the same thing is insane. So you've got to change a little bit. You've got to evolve and tweak. So, and I say one of the most important things or factors when researching a company is to find long-term tailwinds. Do you know where that comes from? What that means?
No. Well, I'm sure you'll tell me.
Yeah, well, tailwind. If you're a boat, you want tailwinds, don't you? If you're racing boats or in a boat somewhere with a sail, you want tailwinds because that's what pushes you along. Headwinds, obviously, are into you, and you can't sail forward in headwinds. You have to go sideways. That's very clever, actually. You've seen how boats actually go forwards in headwinds. They have to go sideways to catch and change the angle of the sail, and then, what's it called? Tracking, I think it's called. They go back and forth. But anyway, so tailwinds are what you want. And in business, what does it mean? It refers to a certain situation or condition that may lead to higher profits, revenue, or growth. And this company, eEnergy, has massive tailwinds, I believe. What are they? First and foremost, high energy costs right now for companies. That's a huge tailwind. It is the biggest input cost for any company at the moment. In fact, even personal households. So have a guess what's costing us the most at the moment, Steve. I'll give you a clue there. As a person yourself, what's costing us the most?
Fuel. Your petrol, diesel, isn't it?
Yeah. Well, basically,
gas, natural gas.
Yeah, the ONS said, I can never say the word statistics in a sentence. I have to say it on its own. But the ONS, the Office of National Statistics, said the biggest input, or the biggest inflator within the mix is household services, which means energy, basically. What you're paying for your heating your house, all that stuff. That's the biggest in it. But it makes up 3%. And there's hundreds of stuff in the basket they use for the CPI figure. But that's 3%. Is the biggest contributor, and then second on the list is food, and that's 1.5%, makes up 1.5% of that whole cost. Now, you imagine being a company that makes stuff, that uses energy, that you are energy intensive. That energy bill has rocketed. It's pretty much doubled, Now, you imagine that the squeeze on your margins there. Before, let's say you're £1 million business. Let's say you're a business, and your bill. In fact, worth checking out Harvey Sinclair on this webinar recently. He said basically, he knows a company, and they've got 1,800 customers, by the way. But he knows a company that's their energy bill has gone from 1 million to 2 million. That's the norm. It's basically doubled. You imagine that cost going from 1 million to 2 million on energy in the last 12 months. That's a phenomenal headwind view, eEnergy do that. Not only that, that's a midterm, headwind. Not only that, but they can reduce that cost and get you to net zero profitably with no upfront costs to you, which is phenomenal. So normally companies would, pay for a new energy provider, then they have to pay for everything else, like installing the stuff and all that, anything like sort of heating, ventilation, air conditioning, maybe e-lights, all that stuff. They have to pay for all that and smart metering, consultancy, all that up front as well, which they have to get a return on as well. So eEnergy don't do that. They will come in, they'll say, we can identify already 30% you're wasting. Did you know that? It's a good stat, isn't it? 30% of energy used by companies is wasted. Absolutely wasted, just goes nowhere. You pay for it, you don't use it. Lights left on, all that stuff. They can install their proprietary award-winning smart meters, identify that straight away. Doesn't cost you anything up front, by the way. A company or business say, we'll put these in, we'll find out where you're wasting energy. Doesn't cost you anything up front. We'll maintain the meter, we'll upgrade it, we'll do all that stuff. And all you do is pay as a subscription on a monthly basis, and that money will come from the savings you've made. So that's amazing, isn't it? Where's the no-brainer there? So you can get cheaper than what I'm getting at the moment. I'll be more efficient, and it doesn't cost me anything. That's phenomenal. I make money from it. So that's what they do. And I said, and this is why the market's selling off. Inflation, largely energy inflation, and this company helps companies reduce their biggest input costs, which is energy. All right, and they've got when they first came to the market. I bought this years ago because I quite liked them, but they had e-lights. But these are new, Internet of Things lighting system. They'll install, maintain, upgrade, and they monitor those as well. They started off that, but now they're 4 companies. They are ranked as the 5th largest energy management procurement platform in the UK. They manage 4.2 terawatts. A terawatt! On Back to the Future, did you say gigawatt or terawatt? What did you say? Oh, so so this is a terawatt. Well, how big is that compared to a gigawatt?
It's 1,000 times.
Oh, wow. So
there's 1,000 gig in a terabyte.
Terabyte.
I'm talking about terabyte. Yeah, well, I'm thinking about bytes. But it's the same thing. Tera and giga, yeah.
So on Back to the Future, what do you say? 1.2, was it 3 or 4?
I can't remember.
Steve, you're a fan of Back to the Future, you know that.
Yeah, I haven't watched it for a while. I can't remember these.
You even went to the musical. Do you remember that?
Yeah. Yeah, I do remember that, yeah. I don't know, can't remember.
So he says,
1 point something.
The car requires 1.21 gigawatts! That's what he said. Yeah. He said, all we need to do is get back to the future and I need 1.21 gigawatts. What? Anyway, eEnergy managed 4.2 terawatts of energy, which is pretty much 1.5 billion of energy spend for 1,800 customers. So well diversified across the public and private sectors. They make it possible for companies to get to net zero profitably and in 4 ways. So essentially, they procure, they measure it, they reduce it, and they generate it, which is very important. So in my mind, it's a no-brainer. This is very clever. So they'll come to you, they'll say, okay, let's have a look, we'll put the smart meters in, we'll see where you're wasting energy. Straight away, we'll bring it down. It doesn't cost you anything up front, okay? You just pay a subscription to the service, and that is paid for through the saving you make. And how do...
Who's paying for that then? So, are they paying for that?
No, so eEnergy have 2 sort of funding options. First of all, they are invested with a company called, it's an energy fund, an investment fund in Switzerland. It's one of the biggest in Europe. They've got 10 million euro sort of fund there. So this fund basically gives them money up front, and the investment, the receivables they get from the company are paid to them basically. So eEnergy get money from fixed consultancy fees. So first of all, for consultancy, 3 to 5 year contracts. They get fees for consulting every day, every sort of month, whatever, or on call. They come in and help you look at upgrade your sort of systems, and also they get supplier fees. So from the energy companies themselves who supply the energy, they get like a percentage on volume used. So even if energy prices go down, it doesn't matter, because if energy prices go down, you tend to use more anyway. So eEnergy also get paid on usage, volume per kilowatt hour. So it's not on value. So, at the moment, people are trying to use less. They'll help you reduce that, use less, but obviously they get a percentage on. So it's 2 ways, basically. They get it from the customer on consultancy and from the energy suppliers on usage, all right? But yeah, they've got a debt facility, and also they've got this investment fund. They're given upfront cash, and this fund invests in anything sort of, zero carbon, although it's a zero carbon fund in Europe. It's got, I think it's quite a big fund, but it's growing very well. So you've got the energy visualized there in that smart meter. By the way, this smart meter, Avi was saying, right? It's not. People think smart meters are all the same. They're not. It's like having, I don't know how you compare it. Sort of a basic computer with a, all bells and whistles computer, or different apps. So basically, we own the software. The hardware's outsourced, but it's an award-winning software. It's proprietary. It's ours. He said we can identify 30% of energy. He said the nearest thing I've seen to our platform. So the analytics are all cloud-based, so anyone can access them. As a client, anywhere you are on an app. But he said the only thing I've seen as close to ours, as good as ours, pretty much, is Centrica. Centrica, massive company, British Gas used to be. They acquired Panoramic Power in 2015. He said it was a leading provider of device-level energy management solutions. He said that's similar to our platform. Centrica paid £39 million for that. That's bigger than eEnergy's market cap. And this is just one part of the business. So it shows you the investment's going into this. So he's very proud of this smart reading. They've got E-Light, very fast at the moment, e-charging. So if you, Steve, I was saying this example, you imagine if everyone in your road wanted to charge their cars. How would that happen? Just all plug in, would they?
Well, they'd need to get a car charger installed, wouldn't they? Yeah.
Mm. You imagine, living in a London street where houses back, cars parked everywhere, right? And you see that in London, you see, literally, when I used to live in London, you had to park like 30 yards down the road to find a space, you know? It was like ridiculous. I thought, well, how would you charge a car? You can't have chargers everywhere. It'd be nuts. And I think, so in future, and also, you can drive to work. Let's say, example, most people don't drive to work early, do they? They don't say, I'm going to drive again extra early because I love my job. If you're a teacher or something like that, or work for the government, and you can't charge at home, where are you going to go? To a charging station, sit there for half an hour, 3/4 an hour in the morning? You're not going to do that. So
well, one thing I have noticed in London, I was in there this week actually, is they've started turning the street lights into charging stations. Which is a great idea. Yeah,
well, listen, they intend to be the biggest public sector EV charging network in the country, right? And they can do this this is very clever. Listen to this, right? At the moment, right, there are a couple of, at-work charges for people, and they cost the company lots of money. So they'll come in, they can do e-solar as well. So they'll come in, they'll say, we can put solar panels on your roof, you can generate electricity at 35% cheaper than you get off the grid at the moment. So straight away you're making money. By the way, it doesn't cost you to put solar panels on your roof. You pay us as a subscription, so there's no upfront cost for you. So we'll put those on your roof. You're then generating electricity for the building itself at 35% cheaper than the grid. Not only that, you can put chargers in, say it's a school or a government building, chargers in, and your workers can charge their cars, same prices where anywhere else they do it, or maybe probably even cheaper if you're an employee, government incentive scheme in some way, and you can monetize that as well. So 2/3 of that money will go to eEnergy, but they pay a subscription, so it's a choice. They can pay a higher subscription and monetize it, or a lower subscription and get less monetization from it, and eEnergy gets some. So you're not only generating cheaper electricity, that electricity can be monetized via your employees. Isn't that good? Why would you not do that? Why would you just sit there, take electricity off the grid, paying a lot more for it and getting no benefit from it when you could generate your own electricity, and not only that, charge your workers' cars there, people work for you, and make money from it. And all this.
That's a subscription charge, though. That's the cost that they're charging the customer.
Yes. So if, let's say I'm a government building, and I say, I know I have this. I have this. So eEnergy come to you, they put solar panels on the roof, they do smart meters, all that stuff, all subscription. You're saving money, it pays subscription. Then your energy bill goes down because literally you're not getting it off from the grid. It's like 35% cheaper. And then you're also powering the building for electricity, heating, all that stuff. And then you're also putting that into the EV chargers for workers, and because because you've got a garage, I don't know how much it costs. Let's say it costs someone 40 quid to top up their car, right? A lot of that is profit for organisations, say Shell or BP, whoever doing it. Now, if you're a government building, you wouldn't need that profit, or you can make a little bit of profit, but not as much as Shell or BP. So you could charge a lot less for it for your employees, but you'll also be making money on it, because you get it 35% cheaper than from the grid. So, so it just makes complete sense. You are, because, and this will happen a lot more, unless batteries become a lot more efficient at charging very quicker, which they will do over time. But you're not going to sit on a forecourt somewhere charging a car when you can just get it done at work. There'll be a lot more places where you can charge cars. It won't be where, like petrol stations, where you have to go to a petrol station and fill up. They'll be a lot more ubiquitous. They'll be everywhere, So why not do it where you park your car the most period of time? Work generally, where people drive to work, their car is sat idle, isn't it, for hours? Why not charge it there rather than sit at a charging station or a supermarket or whatever, or a service station? Do it at work. Simple. A lot more simple. So, and the thing is, they've got these 4 businesses now. So they've got procurement. They produce low energy there. They've got data insights. So, look at smart meters, all this. They've got funded solutions via e-lights or via heating, ventilation, air conditioning. They bring all that down, net zero, and they can also generate power for you. When they first come to the market, they're just big e-light. Now they can cross-sell across all these solutions to one company. So it's an end-to-end integrated solution, and they say they have no direct competitor in the UK as yet. There are some people who do this or that or this, but not all 4 of these bits, and integrated entirely. And so the revenue upsell there has become massive for them. It started off, for example, they get like 1 million of value through solutions like e-lights and heating light over 10 years from a customer. Now that's more than doubled for the cross-sell, upsell across all different things. So it's and it translates to figures, right? I look for growth, Steve. I look for growth in the companies. What the most important 3 things I look for when I'm investing? Do you know what they are? First 3 filters on my investment strategy.
Go on then.
No, go on, have a guess, Steve. 3 things I look for in a small company that have to fit my first 3 of 9 filters I use. There's 3 filters that are necessary, and I have to have them. There's 2 that are necessary. 3 that are necessary, 2 that are required, and then 5 that are desired. But what are the?
Let's have a guess.
What are the 3 that are necessary?
Profit.
Yes, profitability.
Even.
Yeah.
What's the something different in the market? What do you call it?
That's there, but it's not the first 3.
No, okay.
What are you looking for a company to do when you're looking for small companies? What do you want them to do over time? Like a plant.
Grow.
Okay. The most important thing of all, we're investing in growth companies. If they don't have growth, what's the point? So how do you what signifies growth in a company? How do you know they're growing? How do you measure that, Steve? What do you measure growth in?
Profitability.
What's that?
Profitability.
Yeah, well, top line. I look at top line first and foremost. That's revenue. So it's not profitability, because that says to me, if they are selling more of a product consistently year on year, and I look for 20% growth in top line. If they're doing that but not paying for it, like marketing it, not buying that, so their margins are consistent, and literally their top line is growing, then we know that. What? Psychological. Okay. Boris Johnson saying basically he's not going to step down there. BBC. So if their top line is growing, it validates their product. It means they're selling it it's increasing demand for it. So going back to eEnergy, right? This is their end of financial year, which is very odd. It's slightly tricky when companies do this. But their end of year is the 30th of June, right? Their full year. So 12 months ends on the 30th of June. Most companies end on the 31st of December. It makes sense, doesn't it? Most people's financial year ends in sync with the calendar year, but theirs don't. So last year, 30th of June 2021, they went from 4.5 million to 13 million, and they had 202% growth. So that's good. That's 10 times above what I looked for, 20%. Yeah, and I also looked at value. Their enterprise value is no bigger than 2 times their sales. Back then, they were 2.2 times, so a little bit above. Now let's move forward, because their first half of this year, it's odd, listen to this, the first half of 2022 was from July the 1st last year up until December last year, and they grew again by 42% from 6.7, this is only for 6 months, to 9.5 million. That's 42%. That's 1.6 times EV sales. But look at this year now. Look at this year, right? They're going to do 23 million in revenue this year. Remember, the end of year is, where are we? 25th. How many days till the 1st of July? 4 days. In 4 days' time, that's the end of year. So they're quite accurate. They told the market they're going to be achieving 23 million in revenue. That's a 70% upside from last year, and 3 million EBITDA. That's earnings before interest, tax, depreciation, and more. So that's 250% increase on those metrics. So the growth is there, Steve. Demand is coming in. People are liking what they're doing. And of course, who wouldn't? Transition to net zero on cheaper, clean energy, paying no upfront costs. To me, it's a no-brainer. So that is it. What are you thinking so far?
Yeah, it sounds fantastic.
Yeah, but,
Yeah, but and again, this is me being. I am going to put some money in, as you know, but being ultra cautious at the moment. Yeah. I just don't think with the market, and I had nothing to do with that. I think it seems like a great investment. I just think is now, because even some of my other stocks, which are great investments, and I put a bit more in it, and they've dropped it much further. So I'm just wondering, is now the right time to buy? Because even with this, their amazing news, the fact that they're making more money, is it still gonna? Is it if like companies are still going down? Look at XPF factory, they did really well, and they're massively down from that announcement.
Yeah,
so
is
it going to go lower? That's my question. Because at the moment, I don't want to be putting more money into investments that I'm going to be in a couple of months' time just going, why did I not wait until the U-turned and started going up?
Yeah, but all you can is true. Let's understand, XPF factory, right, are going to be a great company. My biggest holding, I've taken a big hit because they're in the leisure sector. People are worried about discretionary spend. Are people going to spend on escape rooms, boom battle bars when they're being squeezed? I think they will. I think people will still have treats, but nevertheless, the market has lumped it in sentiment wise.
I totally agree with that. But it's got nothing to do with my belief in the companies. It's just I think in my more cautious investment routes from the past years, I would rather buy in at a slightly higher price when it's going back up than trying to gamble the market going, is this the bottom? Is this the right time to invest? And I think that's probably where I'm at with this. And at the moment, I do have cash to invest, but it's also cash which I kind of need in my personal / business life. So I'm kind of I'm reluctant to put money in places which in 3 months' time where I could potentially need it be 20% lower than it was when I put it in and then pulling it out. Do you know what I mean?
Yeah, I know, but understand the sector here, okay? The sector here is tackling the very issue that's taking the market down. Inflation, energy, net zero, those are huge tailwinds. Now, right now, all you can do, you're never going to guess the bottom of the market. No. But all you can say is that on average, bear markets last 14 months. We're now 10 months in on AIM, all right? And we're starting to see inflation roll over. Commodity prices, which are the big inputs, energy, all commodity price, wheat, corn, all that stuff, copper, it's coming down. So if we see, the same kind of print, like I said last week, if inflation doesn't get worse in the next print, next update, and I don't think it will because, commodity prices are coming down. It'll take a while to get to the real market to translate into, for us, people working, shopping and all that stuff. But the market doesn't need that. The market just needs an idea of how worse inflation. If it's not getting worse, the uncertainty is removed a little bit. Central banks then can judge how much to raise interest rates, and then the market will rally. But understand, when you diversify, you have to diversify sector-wise. Now, I've got a big chunk in leisure and hospitality. I think it'll recover, and I think, XPS Factory are one of the fastest growing companies out there, but they're being hit sentiment-wise because of the inflation and the cost squeeze. This company right here helps companies address that, and not only that, that's the midterm, trend. Like I said, energy prices probably will be high for a longer period than we thought because inflation's quite sticky. But then beyond that, there's net zero, one of the biggest trends ever. So they're playing in the right trend. So when you're diversifying, if anything, you need to diversify a bit of, companies that you think, sectors you're going to think are going to be hit, on a sentiment basis into other companies like this that maybe not. And also, if you look at the share price, they took a massive hit recently because their trading update where they said they're going to achieve 23 million and 3 million EBITDA, that was being brought down. They brought it down due to COVID delays and also because the contracts are getting bigger now because they've got multi-service contracts across the 4 divisions of the company. So they're taking longer to land, but they're not cancelled, delayed, and they're getting bigger. And in fact, that's evidenced in their pipeline. Their pipeline of forward contracted revenue went up from 18 million at the end of December to 23 million by the end of March. So there's 5 million increase in their pipeline already within 3 months. So I understand what you're saying, and of course, it's very hard to invest in these markets because everything's seemingly going down. Look at the American markets yesterday; they rallied strongly off the back of commodity prices going down, and also bonds, bond yields sort of coming down. So it's that signifies we may be seeing. And listen, and recessions you normally have a double dip. You know how to sell off and typically test the bottom. But I think all you can look at as well is a value of a company. And when you look at this company, it's on, at the moment, 10 times EBITDA. In fact, going into this year now, it'll be 6 times EBITDA. That's cheap. When you consider, in fact, if you look at it, on a PE ratio, that's profits earnings, how you measure companies, this is around 10 times, all right, this year's earnings. SMS, which is a bigger company in this smart space, they do smart meters and everything, they are trading on 55 times PE. Their PE is 55. That shows you how hot the sector is. So this company at the moment, compared to peers is very cheap, and they're growing very quickly. And also they're in the right area. This is a long-term trend. I can safely say net zero is not going away for 10, 20, 30 years. Most companies, the biggest companies in the world, have 2050 targets. How far are we away from that? And that's massive. And most of those targets are going to start kicking in after 2030. They're not even anywhere near. So this is a trend that will continue for decades. It's something you say. So looking at it like that as in diversification, Steve, getting into hot areas and diversifying and a trend. So that's what I like. One of the biggest filters, I said, first three filters are, for me, growth, value, and profitability. They're going to become profitable. And then the next one is megatrend. Is it in a megatrend? That's very important. And of the companies I own, quite a few of them in hot areas. But this is the hottest area of all. There's no bigger trend in the world than net zero. There's reports out saying to achieve net zero, global companies, 1 to 2 trillion a year of investment is needed. There are 2/3 of the heaviest emitters have set net zero targets. They talk about reducing 10 gigatons of CO2 by 2050. Huge targets. And even in the European market, eEnergy say it's a 50 billion euro market, which is growing at 41% compound annual growth. That's massive for a sector. When I'm looking at companies individually, look at growing their top line by 20%, this sector's growing by 41%. So, the trend is there. Money inflow is there. It's everything. ESG is one of the biggest investment themes of our life. And this sits right at the centre of this, environmental, So it's a huge trend, and it's only going to get bigger. Just on the market cap, by the way, 9 pence a share, they're 31 million market cap. And the board of directors have all skin in the game. Harvey is CEO of 6%. You've got Derek Myers, who's non-exec director and owner of one of the acquisitions, 13%. Also, you've got a nice mix of what they're called institutional investors in there. I like it a lot. And by the way, these figures, they did record figures in Q3, which is from January to March. Let me just go back here. Trade update. So they did record figures Q3, starting 8.6 million of contract value. Q4 started very well, so the momentum has continued to Q4. So the contracted value's gone up, forward contracted value's gone up from 18 to 23 million. And by the way, they said launched eCharge. They've had excellent demand. And also solar. They said solar, they've signed 7.8 million heads of terms have been signed for solar. Now, this will start ramping up this year. And that's not even in those forward contracted figures of 23 million yet, because these are heads of terms. So as yet, they haven't been converted. Basically, they'll expect to convert these in H1 for full year, financial year 23, which starts in July. So these will start be converting. So it's all go. And just looking on a basic level, you'd put a multiple of 15 on their EBITDA earnings. So if you look at 3 million for this year, just this year's ending, times 15 is 45 million. Their market cap is 31. Now next year, very confident doing 5 million EBITDA, times that by 15 is 75 million. We're now at 31 million market cap. So that's a good double. In my mind, as a share price, you can get this below 10 pence. You're looking at a good 20 pence by the end of the year, probably next year, hopefully. And it's a good double your money in there, based off fundamentals, that's financials. And
do you know what? And in any other time, I would have bought by now, and I would have bought weeks ago, known about this. But it's just like a lot of my money that I put into investing is usually money that's there to be pulled out again if needed. Most of the time, I don't need it, and it's I being freelance, self-employed, usually more work comes in. But you've always got to have that kind of like lifeline there to be able to pull it out. And what I don't want to be doing is putting it in and then it dropping by 20-30%, which has happened in the last a big chunk of investment I put into my
but do you scale in though? What I do, if you want to have fear of missing out, right? For any investment, if you like it, do some research, scale in. And like in this market, the bear market is a good time to you've got plenty of time to research. Nothing is going to go straight up. It's it's going to be very volatile for like a couple of months. So. But you may have days where it shoots up and then comes back down, So if you're any investment, even in funds, scale in. Bear markets, you've got plenty of time to scale in. So you can actually start with a small amount and then that gives you a little bit of interest in the company. It makes you want to research it. And then if you're not happy, just pull it out because it's...
You know what? That's very true. I was looking at putting a chunk in. So maybe, actually go with the scaling because that actually takes that fear away a little bit, I guess, doesn't it?
Yeah, exactly. I mean, when I talk about scaling, let's say your investment portfolio, that's 100% there, including cash and all that. And I'm talking literally less than 1%, literally put chuck it in there, and then it gives you. That means you'll start following the company and getting updates. Then you get another update that's positive, maybe, and don't buy on a day where a positive update comes out, where it rallies like 5%, 10%, whatever, 20%. Don't do that. Wait for a while, let it come back a bit. Then, if you like the update, put a bit more in, and that's it. And go on updates. Don't just, with companies especially, with funds, you don't need to do that because there's so many companies in a fund, there's lots of good news in there, that fund. But with companies, you have to read updates. And if it's going to plan, then scale in slowly over time on dips. If it's not going to plan, then you haven't committed a lot of cash. You can just get back out, That's why you should never go all in one big investment there, because the road of business is not straight, and you can have upsets. So if it doesn't go to plan, if you haven't got a lot of cash in there, you just scale back out, easy.
But it's the luck of life, though, isn't it? Every time I've scaled in, the stock goes flying up, doesn't it? And whenever you don't scale in, it goes flying down. It seems to be the case, doesn't it?
Yeah. Energy. Okay, and so Stevie, then that's my pitch to you.
No, I like it. I'm in. I'll put a very small little amount in and scale in from Monday.
Yeah, and I'm expecting, because their full year end of year is in a few days' time. What day is the 30th? Next 4 days. Where are I? I'm rubbish at dates. Do you know I can't do dates? If someone says to me, I'm almost number blind on dates. Thursday is the end of year. Most companies do, they don't release the actual financial report. They don't have to release that for 6 months. Companies tend to release it before that. So they won't have the full financial results out on the 30th or after that. But what most companies do is give a trading update after year end to say how things have gone, and they give basic figures, and they also give a bit of an outlook as to how things have been going, looking forward. So, so put a little bit in now, then whenever in a few weeks' time when they come out with a trading update, read it. If it's going to plan, think, okay, if it's very good and the share price goes up on that day, don't be tempted to chase the share price. Sit back. As we know in this market, people take profit, the share price comes down a little bit. So maybe give it a week after the news, and then if it's come down, scale in again, and do it like that. And that's the way to, that's a good risk-reward sort of management there. Cool. Anything, I tell you what, I'm now watching 2 ends of Better Call Saul. I'm watching the first bit with Megan. She's finding it hard to get into, and it's annoying me, which I keep saying to her, this is a good program, it's an excellent show. What's wrong with you? And the first bit I remember was a bit slow. It's starting to get into it now because there's lots of threads of stories coming together, I'm towards the end now as well. I'm watching both ends of it. Have you watched anything else, Steve, recently?
Yeah, do you know what? I've been holding off on the latest season of Stranger Things, and everyone's been raving about it. And then one of my close friends said, "Oh yeah, I watched it. It was all right. I was actually a little bit disappointed." So I started watching it this week with quite low expectations of it not being as good. What? It is brilliant. So
What's
good.
It called?
Stranger Things.
Oh, okay, yeah.
Season 4, but it's so good.
Yeah, but I know someone on Twitter said, "I just watched Stranger Things. It is absolute SHT."
Yeah, do you know what? I think if you watched it, you wouldn't like it.
Yeah.
I don't think it's your cup of tea.
Okay. No, I'm not. I do prefer almost, if it's going to be drama, it's got to be close to reality a little bit.
It's very sci-fi. It's monsters from the other world, the other dimension. So I'm not sure it's your thing, but it's very well done. Like the special effects and and like watching it on my my surround cinema, like all the sound effects and the way they do it is like very immersive. But if you're into that.
Okay, and and this has been on for a while, isn't it? This is the thing that Kate Bush is number one and all that stuff, and it's been around for a while. And do you know what? I just watched a bit of Glastonbury last night. I'm not in it. Would you ever go to Glastonbury again?
I don't know if I had a friend ask me this, because I should have gone a couple of years ago and all my mates went. But I fancy it, but it's just the camping part. If I could go and live in one of those 10 grand Winnebago things or whatever they are, the fancy teepees, I probably would, with a nice toilet, but I don't think I could do the camping I don't mind camping, unlike you. I actually quite enjoy camping, but I enjoy camping when there's not the fear of someone, a drunk fool, coming and falling into your tent, or someone stealing something from your tent, because I like my luxuries. But yeah.
It's almost escapism of people. I saw people there, dressed up in ridiculous costumes. So this guy saying, "Yeah, I come here for 3 days to escape. I can be who I want to be." I thought, why don't you do that outside Glastonbury? So you're basically not presenting your true self. People walking around naked as well, like naturists and all this stuff. And I saw Billie Eilish. I didn't realize she was only 20, isn't she, Billie Eilish?
Yeah, really young.
Wow. But she comes on stage and says, "Everybody scream!" And my instant reaction was that, no, I'm not going to scream. No, I'm not. Why do you want to scream for? And everyone screams their heads off. It just seems like a bit of sheeple, I don't want to scream. It's too loud. Can we just watch it? Can we just watch it nicely without screaming and shouting and stuff?
Yeah, Glastonbury's definitely not for you. It really isn't.
But that thing where someone on stage says something, everyone just does it. That's like it's almost like a Kim Jong-un thing. It's like everybody punch someone in the face. Yeah, everybody scream. Right, poo your pants. Oh yeah, Will, I'll do that. Yeah. No, I've got my own opinion. I'm not going to scream or do any of those things. If anything, I'll barely watch it on my sofa, if you're lucky.
Yeah, but it's a bit different when you're there, and like that crowd mentality, and you're in the vibe of it. So I get kind of watching it at home. It does feel a bit weird when people say, "Make some noise." You're like, "No, I'm all right."
Yeah,
it's like the comedy thing, isn't it? Like when comedy's always more funnier and you're always more into it when you're in events compared to on the TV. And it's that kind of thing, isn't it? When you've had a few beers and don't tell me I've never heard you scream at a gig over the years.
That's odd, that, isn't it? It is odd, that. It's like, why does that happen? Because when what's reality? I suppose there's different realities, isn't there? There's different versions of reality. Because when you're at home, like you say there, you watch a comedy gig and people are laughing at every gag and you think, what's so funny about that? It's not funny. Because you realise it's infectious. People are there. So, and then, like I said, my first reaction to Billie Eilish is, "Everybody scream!" And first of all, I said, "No, I'm not going to make some noise. Thank you. I'm sitting here, eating my pasta. I'm not going to scream, thanks very much. It's inconvenient. Some people are in bed, actually. So I'm not going to scream." So it's like, yeah, it is that. What's the reality? Is the reality the person of you at home, because that's where you spend most of your time, or is the reality you in a crowd mentality, which is dangerous, I think, I don't know, I'd never go there again. And I know people say it, but the toilets and all that stuff, camping, do you know what, it's hell on earth for me. Glastonbury is hell on earth. Literally, you've got to camp. I hate camping. You've got to share toilets with people. Not only that, you've got it's literally demeaning. You have to queue to get into a filthy toilet. Why would I want that? It's nuts. When I go on holidays, right? I want to spend a week or 2 weeks at a place that raises my standard of living in a nice hotel. I don't want to reduce it. That's nuts. Like I said before, there are people trying to get into this country, living in tents over the border there, and they're trying to get out of that situation, but we pay to go into that situation in a campsite or Glastonbury. No.
£258 a ticket.
You're paying for that nonsense. That's not a privilege. Yeah. I don't mind.
It's actually, because they were talking about the price actually in the media, saying it was in 1971 it was £1 and now it's 258. And actually, when you think about it, it is a lot of money. But you go, for what it is, if you turn up on the Wednesday, or is it Tuesday or Wednesday? I can't remember when it starts now. Yeah. And you're there till Sunday. Like, you couldn't go away on holiday for that, for a festival like Ibiza or something. It's good value for money as entertainment if you're into the entertainment you like, or the bands that are there. So, but yeah, you do have to sacrifice a bit of slumming it a little bit. But that's what festivals are all about, I guess, isn't it?
Yeah.
The older you get, the less enticing it is.
Yeah. My kids are literally opposite to me. They love noise. In fact, Fred's calming down a bit now, but Monty likes noise. chaos. And I'm the opposite,
But that was you when you were a kid.
Yeah,
though.
I know. Yeah. He's walking around the house with TikTok blaring. All these guys, these mean things that read out the text on the screen. And this man was Molly turned down, and he's also singing along. You singing a song not related to the video, and that's blaring. Just bring the noise down. The little noise machines, Just bring it all down, yeah. Just turn it down. And in fact, now, Steve, if I even go to, I have to drink alcohol to tolerate. Going out to events I wouldn't normally go out to. That's my toleration. That's how I tolerate it. Generally, if I went to a place where the DJs, any requests? Yeah, can you turn it down a notch? That's my request. Just a couple of notches so we can have a chat. Yeah. Anyway, cool. So Stranger Things not for me. Better Call Saul. Anything else I've been watching recently? I tell you what's worth watching, Steve. I mean, it takes a bit to get into. It's called Knuckles. I don't know if you'd like this on Netflix. It's about traveller families in Ireland.
Oh, yeah, no, I'd like that.
And they've had this beef with each other since 1992 because one of the guys died. A fight outside a pub. These two families, rival families. They used to be friends. The Joyces, I think it was, and the McGolls, I think it was. But they had a fight outside a pub, drinking. And had a fight, and one died. Since then, they literally post videos saying, I'm going to fight you, I'll knock you off, come on, I'll take you like a real man, I'll beat your face off, come on, I'll beat you, I'll smash you on the floor. And that's all they do is send videos to each other, one in fights.
Is this a documentary or a film?
Yeah. And this guy, win the trust of them, he's filmed all of them pretty much. But this shows basically fights between these two different families, and they're all sort of related. But it's nuts. It's almost like, what's it called, Snatch? Is it Snatch?
Yeah.
Yeah,
Snatch, yeah.
Yeah, it's almost where that's come from, It's that's a bit more polished Snatch, but it's just crazy. You think, guys, they're brought up, and you think you feel a bit sorry for them, really, because they're brought up outside the school system. So some of them are uneducated or ill-educated and uneducated, and they're brought up with the thought of fights and fighting all the time. That's how they solve it. And you think. It's been going on now. You've been fighting for years. It doesn't solve anything. One guy wins, one guy loses. Then next time another family member fights, you fight again. And they just send videos to each other, slagging each other off. And so sometimes you see these videos online of these traveller guys shouting into the camera, in a vest and throwing punches, and I'll fight you, I'll fight you. That's what it's about. It's one, family, traveller clan calling out another, and it's just ongoing. It's nuts. It's just crazy. You think there's no end to this, It's called Knuckles. Worth watching. But
give it a go.
Yeah. But I quite like it, actually. Marvellous. Any plans for the weekend, Steve?
No, I've had a quiet one. I've had a busy week in work, so just a nice, quiet, relaxing weekend.
That's it. Watch Glastonbury's. Make some noise! Yay! Do you think there's any people that actually get really drunk and watch Glastonbury in their house and really get into it?
I'm sure there are.
Not I. Marvellous stuff, Steve. Speak to you next week.
Bye.
The Share Pickers Weekend Podcast with Justin, Paddy, Peter and Steve. The content of this podcast is not intended as investment advice. It is for information purposes only. People in this podcast may hold positions in the stocks they talk about. Do not buy anything based solely on a tip or recommendation. Please do your own research.